Funny Shekhar, fund manager, PMS with Angel Stockbroking is ready, and along with him, let me also bring on board Sandeep Wagle, founder and managing director of Apata Technicals, to give us the technical picture as well. Gentlemen, good evening to both of you. Thank you for joining us, and Tushar is also ready, so I can also introduce and welcome him. Tushar Pradhan, he represents HSBC AMC. Gentlemen, good evening to all three of you now, and thank you for joining us. Funny, there is good news and there is bad news. Good news is that Fitch has changed their India rating. Bad news is that today Indian markets did not capitalize on the rupee recovery.
Well, it's certainly a good news on the balance. However, I don't expect fresh inflows on the back of an upgrade in the rating. What it might do in the current situation is it might stem the pace of outflows, because globally the phenomenon of dollar strengthening continues, and there is no evidence for us to suggest that suddenly rupee will change course and it will start relatively strengthening against the dollar or vis-a-vis other emerging markets. So I would tend to believe that the slow momentum of currency appreciation might continue, or at best currency depreciation may not happen, or it might remain stable at these levels. But overall, the nervousness with regards to emerging markets might continue irrespective of the rating change.
Sandeep, technically how is the market looking at a close around 57.60?
Aisha, 50 to 60 point bounce back on the upside. I would talk of a level of 58.20 to 58.40, where again it should meet with some kind of a resistance, and the downward selling can resume or is likely to resume. I don't see a move beyond 58.40. In case it opens up and starts trading around those levels, 58.30, 58.40, I would be more comfortable taking a short or a sell. And I don't think this news has any more positives beyond that. Let us see. If the trend were to change, it has to very clearly take out 58.80 and close above that. Then we can talk of a 6,020, 6,040. So as of now, I don't have that view, even based on this news.
Tushar, in the near term, do you sense that there could be further downside to the market? Technically, we already breached the 200 DMA, both for the Bank Nifty as well as the index just yesterday. Do you think there could be another 5 to 10% downside left, purely on adjustment of how much the currency has lost?
Yeah, clearly there is always this possibility that the market may go down further, because as we all know that the market is momentum driven. So when it takes a direction, it does go beyond the fundamentals. So while I feel quite comfortable with valuations at the moment, I think there is every chance that the market does overachieve, both on the way down as well as on the way up. So I think there is enough possibility for a much weaker market in the interim from here.
Funny, what is your take on Titan? Closer to 200 or sub 200? Would you be a buyer there?
No, I think the pain will be much more than that. Because as you correctly alluded, the business model has come under stress, and simply because of the incremental borrowing, you are likely to see that the earnings growth might be shaved off by at least 15 to 20% because of higher interest costs, lower other income. And the P, which is even today after correction ruling at around 19 to 20 times, might easily come down to 14 to 15 times, because what has happened over the last 3 years is there is a tremendous operating leverage that has kicked off in Titan because of rising gold prices, which have not commensurately decreased the volumes. In fact, if at all, they have increased the volumes. So when you see that eventually the gold demand falls in line with the long-term averages, that 3.5 to 4% incremental operating margin that has come to Titan might go, which in turn again will depress the PE multiples. I think in the next 3 to 4 months, I will not be surprised to see a stock price of around 140 to 150 rupees on Titan.
The one sector which is going to be in focus come tomorrow's session is going to be cement, because the Supreme Court has now given out its verdict in the cement case, and cement companies are now going to pay a 10% of CCI penalty by June 24th. While much of this news is already in the price, Sandeep, what's your take on the cement majors? Is there any stock which is looking attractive for a trade, either on the short or the long side?
Not really, Aisha. Not very clear. Drifting down with the markets is what I would talk of. I don't have a very clear sell, neither do I am I getting any patterns which will induce me to buy, so no, I would let it go.
Tushar, clearly rupee is the big story. Given the way how rupee has collapsed against the dollar, how are you changing your portfolio strategy, and are you looking to add more IT stocks?
We have rejigged our IT portfolio and we continue to remain a little positive on IT, but this was much before the drop in the currency, and that's not been a trigger at all. In fact, what we were talking about earlier was the fact that the US is showing some very positive economic signs, and that is on margin something really positive for the IT space, because most of the client base is in the US. And I think we were pretty positive about the fact that things will start to improve as we go along there. And we were positive on the IT sector, and we were a little overweight vis-a-vis the index. So we continue to remain fairly positive on the IT sector, but not necessarily just because of the drop in the currency vis-a-vis the dollar.
The one pocket, though, which relatively did a bit better today was definitely the banking pack. A couple of mid-cap PSUs actually held out in trade, as was the case with some of the frontliner names. And on a net basis, you had the Bank X, which actually recovered a wee bit, and the Bank Nifty futures closed in with a gain of about 0.3%. Sandeep, your take on the Bank Nifty, and what trade would you execute come tomorrow morning?
Aisha, I find a lot of similarity in the Nifty and the Bank Nifty pattern. I don't see too much of a difference. Maybe the beta is a little higher in the Bank Nifty. Some more strength in the Bank Nifty, I would agree. But at higher levels, I still see weakness in the Bank Nifty as I am talking of the Nifty. 11,950 to 12,000 is the level where I am very, very comfortable going short in the Bank Nifty as well. And I would talk of levels below 11,700, probably 11,550, 11,600. And this is not a view for a day or two, probably for the next week or so.
Right. Funny, what is your take on metals? Are you a contra buyer there? Because the metal stocks, A, they are attractive. Hindalco is now trading much below its book price. Ditto for Tata Steel and ditto for Sterlite as well.
Well, a lot of these metal stocks that are listed have individual situations of their own. So to that extent, it will be difficult to purely take a call on metals. But if you talk about companies like Hindalco or Tata Steel, their domestic operations will certainly look up over the next 18 to 24 months. Because a lot of their greenfield expansion will end by that time, by the end of this financial year. So I guess if there is more pain in the stock from a longer term investor's point of view, it might be a good idea to look at metals, but with a clear understanding that it might take 2 to 3 years to make money over there.
Time for some money making ideas for tomorrow morning, and for that today, Pranay is standing by.
Well, dealers and analysts both are very bullish on Havells, where the management has recently indicated a bullish stance of the company. They're basically saying that the European business is improving and turning around. And the analysts are saying that the margin improvement is expected further in this company, where it had seen an improvement in the last quarter, and it's expected further on the easing of commodity prices, primarily copper, in divisions such as cables as well as fans. Also, the company had increased its ad spend to pose higher entry barriers for competitors, and that's clearly paying off according to initial dealer and distributor checks, where the company has gained market share in segments such as cables as well as fans. And the company is currently focusing on ramping up the manufacturing and channeling more exports from domestic production through Sylvania network. So this is the important game changing for it. And desks are indicating strong accumulation by DIIs at current levels. Next is M&M Financial Services, that was down in trade today by about 3.5%. It's already seen a correction of 6.5% in the last 2 days. It's a strong contender for the banking lessons, and primarily on technical trends. Dealers are very bullish. They are anticipating a pullback over here, and they see the stock touching levels of 250 in the near term.
Okay, Pranay, leave it at that. Sandeep, what about your top trading calls for tomorrow?
I would go with a buy in Lupin above 778, stop loss of 763, target of 810. A sell in Financial Technology, stop loss 790, target 741. And a sell in Hero Motocorp June futures for FNO traders, stop loss of 1627, target of 1550.
Funny final question, as a fund manager, where are you allocating disproportionate amount of money, and where exactly are you a table thumping bull in this market?
Well, we had been liking the complete agri-ancillary story. So right from the seeds, fertilizers, all the way going up to tractors. So one of the ideas which has been our favorite out there is Swaraj engines. Apart from that, we have been liking the print media story for quite some time, and the recent correction in a stock like Jagran Prakashan, which happens to be the leader in that space, gives us an excellent opportunity from a long-term perspective.
Tushar, at a time when you are of the view that we could be, staring at a new growth cycle very soon, what is it that you're loading up? Are you loading up autos because they would benefit because of a rate cut, or are you, piling up industrials or machinery and capital goods stocks?
See, every economic cycle brings along with it a chronology. So, for example, we are not going to get gung-ho about longer-term, long gestation power projects, for example. I think that's still a very, very far point away. The valuations in all of these sectors are very, very attractive. We'll stay away from those. But the first signs of an economic uptake will be shown in light engineering, will come up in certain basic, or let's say small capex across industry. And that is really where the attraction should be for now. So what we are looking at is which are the early cycle stars where we can focus on an uptick, and that is something that will definitely benefit in the next 6 months. As the economy picks up and we get signs of a much more sustained economic upcycle, we should move to medium-term to up to large-term project companies, and that's really the third phase of the cycle. But at the moment, as I said, we're not making any dramatic changes. We're not betting on growth coming back with a bang. We're not betting on the really, really down and out power sector, for example, the power construction sector. I think there is still a lot of pain there before it can start to move out of it. So I think we have to take a graded step, and I think what we're looking for is very select engineering plays in the industrial and manufacturing space. We're continuing to look at banks because they will definitely fund the recovery, and we will look at some ancillaries along the way in the auto sector as well.